as more and more entities hold Bitcoin as a normal course of operation, the network becomes bigger, more liquid, in time, I would argue less volatile. And that's indirectly good for some of those more cypherpunk things. It's better when the currency is not fluctuating around by like 80%, having these massive drawdown stuff. Obviously, be like upward volatility, but eventually, when you get to a certain scale, both sides of volatility should hopefully decrease, and that's a good thing for those other purposes. And I think we saw kind of similar ratios back in November 2024 after the election, when it broke out to kind of the first time it was touching 100K. We had similar kind of a consolidation since then at around a similar kind of market value to realized value ratio. So it's not that surprising to see that the market needs time. There was a lot of euphoria around MicroStrategy at the time as well. I mean, it was trading at like over 3 times NAV, if I remember correctly. And these things just kind of take a time to digest. So
although Bitcoin has experienced remarkable gains, Lyn Alden highlights that the underlying market fundamentals point to a more nuanced picture. She notes that increasing budget deficits and the Federal Reserve's monetary stance are giving Bitcoin long-term tailwinds. Alden cautions that there is still short-term volatility, particularly given the global fluctuations in liquidity conditions. She uses historical trends to compare the current market behavior to past cycles, pointing out that consolidation periods frequently come before explosive surges, as was the case with Bitcoin's 2023 stasis before its early 2024 breakout. Despite persistent regulatory worries and institutional hesitancy, Alden claims that macro drivers like debt monetization and geopolitical turmoil are making decentralized assets more appealing. For more information about cryptocurrencies and the digital asset world, remember to like this video, subscribe to the channel, and enable post notifications if you like this kind of content. Additionally, please feel free to leave a comment below with your thoughts. Thank you for watching and enjoy the video.
Lyn, what was your reaction to this moment? And if you want, why do you think price action is flat?
I think Steven summarized it well. I agree with the points he made. Basically, this is pretty much what price focused Bitcoiners would hope for, is that Bitcoin is kind of separated from the others, that they're at least going to ring fence the coins they already have. That was at least my kind of lower end base case, is not trying to expect bigger things, and I'd rather be surprised to the upside than the downside. So we at least got, it seems like, the minimal start, and then we'll see. I think that there's a couple reasons I think why price action is not very great at the moment. I think one is that the market already kind of anticipated this. It's not really like a massive upside compared to what they expected, and to the extent that it could be, because of the open-ended nature of trying to find ways to buy more Bitcoin in a budget-neutral way, it's very unclear on the timeline or the scale that will end up occurring. And so the market still has questions, and whenever you have questions, you have price uncertainty. And then in addition, I mean, when we saw like Bitcoin consolidate for 7 months last year, right? So March 2024, it broke out, touched new highs, and there were some kind of like on-chain indicators you can look at that kind of give you a little bit of a measure of maybe euphoria or just kind of the sheer speed of the move. And so, for example, I like to look at market cap to realized cap. Basically, the ratio of market capitalization to like average on-chain cost basis. And when that becomes pretty elevated, sometimes the market needs to digest that, because that's, in some ways, it's like a temporary price. It's like if one house on a block sells and all the houses get repriced, it's like, well, is that really the new liquid price at the street, or maybe does it need more time to actually get there? So I think that Bitcoin had this like 7-month consolidation. Nothing was as euphoric as we see in multi-year tops historically that Bitcoin's had, but it was a little frothy. We worked that out, and I think we saw kind of similar ratios back in November 2024 after the election, when it broke out to kind of the first time it was touching 100K. We had similar kind of a consolidation since then at around a similar kind of market value to realized value ratio. So it's not that surprising to see that the market needs time. There was a lot of euphoria around MicroStrategy at the time as well. I mean, it was trading at like over 3 times NAV, if I remember correctly. And these things just kind of take a time to digest. So I think that's kind of where we are with the market. The way that I generally talk about it is Bitcoin has plenty of its own characteristics to be bullish on, and any kind of large individual nation state buying is kind of a boost, a cherry on top. And it's always better to kind of have just low expectations, so that you're more likely to be surprised to the upside than the downside. One of the narratives that some bears like to use, I mean, some people in the Bitcoin community kind of point this out, but there are also people external to it to say Bitcoin is quote unquote captured now because everybody's focused on number go up and nation states, and I think that's kind of missing the forest for the trees, because this wasn't a decision by Bitcoin to be purchased. It's a decision, by the fiat system to recognize its benefits and to start buying it. And part of what makes some of those other elements strong is when you have a much larger and then potentially less volatile Bitcoin. By being a fairly small asset that not a lot of people understood or own, that limits its transaction potential because fewer people want to accept it. Even if they do accept it, they have to deal with the volatility of it, compared to something like the dollar or stablecoins, that they kind of fill that role. And I think as more and more entities hold Bitcoin, and just as a normal course of operation, the network becomes bigger, more liquid, in time. I would argue less volatile, and then that's indirectly good for some of those more cypherpunk things. It's better when the currency is not fluctuating around by like 80%, and having these massive drawdown stuff. Obviously, be like upward volatility, but eventually, when you get to a certain scale, both sides of volatility should hopefully decrease, and that's a good thing for those other purposes.
Her discussion of the larger economic factors influencing Bitcoin's future, Lyn Alden focuses on shifts in the dynamics of international trade, particularly in reaction to U.S. policy. She cites studies by Donald Trump-affiliated economist Stephen Moran, who looks at attempts to change international trade and how they might affect the value of the U.S. dollar. According to Alden, these policies may result in a more balanced global monetary system over time, even though they may temporarily strengthen the dollar. This change could make other assets like Bitcoin more appealing and lessen the dollar's dominance. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
I think your list was pretty exhaustive. And there's other kind of wonky ones like gold revaluation, that lets them kind of fill up the TGA. I think that's debatably not budget neutral because it does kind of result in debasement, unlike some of the others. But it is different than, say, issuing debt, or using taxpayer funds directly for it. And I think that it kind of the main thing now is just uncertainty, right? Timing, the scale that they'll do it. During, right now when they're kind of focusing on these Doge cuts, they are trying to, for example, consolidate properties to some extent to say, hey, we have half-empty buildings. Can we save taxpayer money by, kind of ending these building contracts or selling these properties and consolidating? And then, of course, one can debate, should that go back to the taxpayers or should that go to Bitcoin? And that kind of opens up a whole discussion. And so far at the moment, I think one of the key things that has already been touched on here is that it's just really good advertising. That basically that the United States government, the president, other people high up in the administration are talking about the benefits of Bitcoin and how it's different than crypto. And I think that's very positive. And I think if you're a nation state out there and you're not already kind of front running this a little bit, it's like, what are you even doing? Like, there's like 200 countries out there. It's like, why is there like 3 that are kind of like publicly known to have some, whatever the number is? And it's like they're basically just telling you right there that it's now endorsed by the one of the 2 biggest countries in the world. And so I think that's kind of how I look at it. I'd like to see actually more things from the government. Like, everyone's kind of focused on the strategic Bitcoin reserve because it is the most impactful for price compared to other things that the government could do. But I like to give a shout out to other things they could do. They could, for example, make the first $5,000 in like capital gains on Bitcoin per year tax free, which alleviates like accounting issues for people that want to spend it on small amounts without really affecting the way that they get revenue from maybe large traders and things like that. So I think there are kind of like low-key things that are quality of life things they could be doing, that are good for the asset, whereas obviously this one gets a lot of headlines because price. When is it going to moon? And so of course that's that's kind of what always captures attention. Yeah, I think a lot of it is just they were very under-owned, as far as kind of most portfolio constructions. If you look at like the U.S. market cap, relative to like all other market caps in the world, it was like comically like everybody was on one side of the boat. Global capital stuffed into U.S. markets, Americans are stuffed into their own markets, and so it only takes a fairly small change to kind of move over, and a weaker dollar always helps. It's interesting because the election and then some of the initial tariff talk was kind of dollar strengthening. But since then, it's come off that, which alleviates a lot of the pressure and liquidity from those things. And if you look at, so Trump has a nominee for his the chair of his Council of Economic Advisors, Stephen Miran. Um, and he's the one that co-authored the paper with Nouriel Roubini maybe a year ago about activist treasury issuance. But also he did a paper on his own in November 2024. So right after Trump was elected, and it kind of walked through realigning global trade.
Yeah.
It's kind of the stuff that like I've been writing about, and like Luke Gromen writes about. It's kind of like that, and so it's interesting to see it from the an economist that is very much in Trump's ear and endorsed by Trump. And one of the things that the paper does spell out is that initially some of these policies are probably dollar strengthening, but then on the back half, they kind of describe it as being more like evaluating other currencies kind of the way that they should be more valued on a trade rated basis. Basically, say that it's dollar weakening in the back half. And I don't think we're necessarily on that back half yet. But it is interesting that kind of behind all of the tariff talk, the kind of the chaotic headlines that can come up, there is this kind of intellectual rigor. That's in at least part of the administration that says, okay, this is our potential game plan. This is how we could align global trade. This is, this is why it's happening. This is potentially how to fix it. And then here's the risks of some of those ways to fix it. Like, can we pull this off or not? And what are the trade offs? And so, I think it's interesting that they are kind of maybe going through that map, that approach to some extent. You kind of have that already laid out. We don't know to what extent they're going to keep following it, but there is a little bit of things you can read to be a little bit less surprised by some of the things that maybe we're seeing.
Lyn Alden deconstructs the larger economic factors affecting Bitcoin by emphasizing the global change in trade patterns and the changing use of the US dollar. Both local and foreign investors have made significant investments in dollar-based assets, she explains, and global capital has been concentrated in US markets for years. This leads to a precarious system in which even a slight deviance from the dollar can have significant effects on asset prices and global liquidity. Alden cites Trump-backed economist Stephen Moran, who co-wrote articles about realigning international trade and activist treasury issuance. Alden said that while these policies would initially make the dollar stronger, they might eventually cause it to weaken when the world monetary system rebalances. Interest in alternative assets like Bitcoin may rise as a result of this possible fall in dollar dominance, particularly for nations wishing to elude U.S. financial supervision. She also talks about how the BRICS countries and other governments are actively looking into non-dollar payment methods. While these countries struggle to create centralized, closed-source solutions, Bitcoin already offers a workable open-source substitute. Alden notes that in order for these nations to take full advantage of Bitcoin's resistance to censorship, they would have to start hoarding it beforehand, which would be difficult given the potential for political backlash and career risks should the price of Bitcoin change. According to her analysis, countries aiming for financial independence are beginning to recognize the strategic potential of Bitcoin, but adoption is still sluggish because of institutional hesitancy and the difficulties in controlling volatility. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.